Morning traders, it's the 21st of December. We're Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How are you, Steve?
All very good, thank you, mate. All
Good,
good.
good. Getting closer, isn't it?
It's very much getting closer. 3 more sleeps to Santa, is that right? 3? Wednesday, Thursday, Friday. It's 4 more sleeps to Santa.
4 more sleeps, yeah. Last day of school for the kids today. I know others have broken up already, but mine have it's been
God,
dragged
that
out
is
for them.
late, isn't it?
Yeah,
21st. I mean,
yeah,
normally it's
last day
be like
today. They've got
17th
half
or
day
18th.
today.
What are they doing to our children, Joe?
Don't know,
I mean,
keeping them out my way, so I'm quite happy with it.
brilliant.
Morning, kids. Right, okay, let's get stuck into the latest headlines then. A fair amount still going on in the wake of obviously what happened with the Bank of Japan yesterday. And let's take a look at what's happening today. So, yet more intervention. On Wednesday, the Bank of Japan again engaged in another unscheduled round of bond buying in an attempt to cap yields after the high volatility seen on Tuesday. The 2-year yield, however, increased above zero for the first time since 2015 following Tuesday's move to adjust the target band for the 10-year yield. The yen retreated from peak levels. We saw gains across the board yesterday, strong support for the currency pretty much throughout, and there was a further round of aggressive position adjustment and covering of short positions as a result. Dollar yen slumped to a fresh 4-month low near 130.50, but there was a corrective move on Wednesday as markets attempted to stabilize. We had some weak US housing data out yesterday. That's the starts were unchanged at an annual rate of 1.43 million for November and marginally above the consensus forecast. There was, however, a sharp decline in housing permits to 1.34 million from 1.51 million a month previous and below the expectations of 1.49 million, meaning it was the weakest reading since July 2020. The Philly Fed data remains weak also. The December Philly Fed non-manufacturing index declined to minus 17.1 for December from minus 13.6 previously, and there was a slower growth in the employment for the month, while the inflation pressures eased on the month. Expecting now liquidity to start dropping off in global markets ahead of the Christmas and New Year period. So we are likely to see some position adjustment as a result of that. And that may be a key element in trading today. This will maintain the potential for sharp moves across all asset classes over the next 48 hours. And in terms of the latest UK data, we saw that government borrowing has surged. The data recorded a surge of 22 billion for November from 8.1 billion the previous year, which was the highest November deficit on record, as debt interest payments also increased slightly. So, some interesting moves in markets yesterday. Obviously, we've seen the wake of the fallout from the Bank of Japan, but some interesting moves in indices yesterday as well, I thought, Steve, which we'll come on to in a bit. A bit of a turnaround there, potentially, as it may have been turnaround Tuesday, but we'll see. Maybe the start of the Santa rally. Let's get into some charts and have a look at how things are looking at one of the risk assets we cover, which, of course, is Bitcoin.
Yeah, sure. Well, we look at just the daily chart to start with, and we can see that we had a nice bullish
You share your
engulfing
screen.
candle. Oh, yeah, sure. 1 second. Here we go. Present, share screen. Come on, Stevie boy. Is that the one? Am I sharing the right one? No.
You'll only be doing this with 750.
No, yeah, feels like it as well. Bullish engulfing candle on the daily chart in Bitcoin. So we posted another higher low. So a nice, interesting turnaround along with the indice markets that Joe mentioned. So that's a positive. Still got a long way to go for this to turn positive in my eyes, though, and I don't think it ever will. We've got the 55 100-day moving average coming in around the resistance levels just above, and the 200-day moving average is also coming down to around about 20,000. That'll be an interesting moment in time. On the 4-hour chart, we're still bearish. We're still in bearish territory. We have to get up above the Ichimoku cloud to reverse this trend. At the moment, we're sort of seeing a little bit of a potential turnaround, but nothing great, nothing to write home about. But that could easily change as the day goes on. But overall, bearish on cryptocurrencies. Let's take a look at gold. Gold has managed to push higher, got up to 1821. The previous spike high, I remember, posted, this is a 4-hour chart, posted a shooting star. That got to 1824 and a half, but it's stalled. We've got this 1844 level a little bit higher up. Actually, this the projected move target on this 4-hour chart is a little bit lower, but more accurate one is probably to look at gold, which has got a few interesting things going on. We've got this real heavy band of resistance that we're breaking through at the moment. That's all the way up to 1810. And for me, 1815 is also pretty key. We've got the 55 100-day moving average crossover. The 55 is aggressively moving higher. That looks to be a good supportive moving average to consider. We've got this inverse head and shoulders type formation. If we think of these like 3 bottoms as the head, left shoulder here, maybe a shallow right shoulder, and the neckline would be around about this 1810 to 1815 level. So we can see the measured move target on this chart is 1844. That's also a 50% retracement of the down move from close to the all-time highs. Remember 2070, and we had 2075 all the way back in August 2020. That's close to the all-time highs, 50% retracement, so pretty key. Next big level of resistance is up around $1,900, and on the way we've got to 1878 as well, which is the highs between May and June this year. So overall, pretty positive on gold, and if dollar remains under pressure, I expect this to continue. Dip buying around all the way down, really, for me, towards like really the 1730 area for maybe a longer term up move. But it definitely feels like a good time to be owning gold at the moment. Silver, similar sort of price formation. We've got an inverse head and shoulders, which is nice and clean. Nice clean break of the neckline, although we did dip further into on the other side of the neckline, so it's a bit scary for a while, but didn't quite get down below the $37 level, and reacted higher. Nice clean reaction higher. We've broken through this level of resistance, which is now turning into support. We'll highlight it there. 24.92, so just in front of the $25 area before we hit the further resistance, but that's the measured move target, and getting very, very close indeed. So nice little technical formation that's played out there. Copper's struggling a little bit. 200-day moving average is just above. It's 386. We've got 396 and $4, obviously psychological level. But we have got also the crossover in the 5,500-day moving average. So all looks pretty set for a Santa rally on the commodities. Maybe it's going to happen in the commodities this year. I know the indices are shaping up as well. Crude oil under pressure, however, still well below the moving averages. We're trading around about quite a significant previous swing low from September swing low, this $76 area on the WTI crude oil. The more significant low is down at $70, and resistance should come in the form of $83. So quite a big band of trading expected over the coming days. Brent crude oil also similar sort of levels, 82.35 on that front. We've found support around about the 78.70 level over the last 3 or 4 days, and price action just moving a bit sideways. Wednesday today, so oil inventories out later. Let's see how that affects the market. And natural gas, one that I was looking at yesterday, looking for a break of this neckline. We did get it. It closed below it, but today we're right back above it, 544 trading, and seems to have stalled and reversed quite nicely. So there may be some interesting move in that shaping up as well. 55 crossing over with the 200-day moving average. That's a death cross, so that's negative. So lining up quite nicely with this head and shoulders formation. But let's see how well the market will time it. Still a little bit to do really on the downside for natural gas to confirm that head and shoulders formation. Just look at crude oil on the 1-hour chart. Let's see that as a request. Shorter term time frame. Well, let's look at the 4-hour chart first of all. We're in this clear downtrend. We are battling with it at the moment. And you could sort of like say, have we got the start of an inverse head and shoulders formation? Started from here, this clear left shoulder neckline, head, maybe we've got a downward sloping inverse head and shoulders formation, and we're basically breaking up. We've broken up through the neckline here. I'd rather see something around about here, or maybe like a higher peak in the left, in the right shoulder neckline, but we haven't got it. So this is what we've got. It is an inverse head and shoulders formation. It's been confirmed. I'd rather see a confirmation of a break above the 77.75 level. I would get a little bit more excited about the potential upside for this asset. Hope that helps.
Lovely, thank you, Steve. Okay, let's take a look at FX then, starting off with the dollar index as usual, and no change there, still trading in a bearish formation. We've got this head and shoulders top, and we're trading within what looks to be maybe some sort of wedge pattern at the moment. So there is potential, if it can break above, I would say 104. 88, then we would invalidate this wedge pattern and potentially form some sort of corrective move higher, but there's no sign of that yet, so we need to wait and see if that does indeed occur. Yesterday we posted a pretty bearish looking candle, a reversal at the upper end of this wedge pattern, and it looks like we're heading back towards these previous lows that we posted on Wednesday the 14th of December, which comes in at 103.44. If we go below that, then it brings the 50% Fibonacci retracement level into play at 102.15, which is a number we've been speaking about now for some time. So still looks as though the dollar index is under pressure, and we can expect to see lower prices here, providing that it remains within this wedge. If it breaks down from the wedge, then obviously that just highlights we're going to see a continuation lower in price. Ultimately, our objective is somewhere down here between 95.96 to 94.93. We've got the measured move target of the head and shoulders top, and we've got a 78.6% Fibonacci retracement level there to target. Let's take a look at Euro US dollar. That's continuing to struggle to overcome this major band of resistance between around 106.52 to 105.95. We did have a little bit of a spike above on the 15th of December, but prices then reversed lower. Yesterday, we posted a doji candle. Let me just get rid of this band so we can see that a little clearer. Well, not too much clearer. Sorry about that. We can see there that it was a bit of indecision yesterday, so still deciding what to do. We had a bit of a pullback towards this support here, a localized support at 0595, which has held. So it looks as though we're trying to push higher again. Obviously, the key level that we need to watch on the upside is this previous swing high at 107.36. If we can get above that, the chances are we are going to see a 50% retracement of the entire down move towards 109.42 on Euro US dollar. Let's take a look at cable. That's on the back foot today, down by 0.22% as things stand. It's rallied into a resistance level here at 124.30, and prices have stalled. Yesterday, we posted some further indecision. It was a stronger day, but nothing really suggesting a major turnaround is going to occur. There is some support around there at 121.12. So the overall trend in the short term is still bullish, but we do have to overcome this resistance here at 124.30. Let's take a look at dollar yen. Obviously, all about yen yesterday, following the Bank of Japan intervention and backed up with further bond buying today. We can see that prices have been contained within this bearish channel. We saw a tag of the upper end of that channel just prior to the announcement from the Bank of Japan, followed by a very swift move to the downside. We did see a little bit of a move below this major support that we've got at 131.25, but eventually we closed above it. So that is, I guess, quite, well, a little bit bullish, but overall we are still trading in this bearish channel. So I still think lower prices are likely, but the key level to watch today is this low that we posted yesterday. That was at 131.49. If we break below that, then we're starting to look for lower prices, and we have a clear topping formation on dollar yen. Let's take a look at some of the other yen markets just to see how they shaped up yesterday. This is Aussie yen, so we saw a completion of a head and shoulders top on this yesterday. We broke down, tagged this previous swing low from the 12th of May, closed above it. We are trying to rally today off of the lows that we posted yesterday, but struggling. So expectations are for lower prices. I've got arrows drawn on there suggesting that we may at some point get a retest of the neckline of this head and shoulders top. That would be the preferred area to get short at. So at the moment, I think we need to be a little bit careful. Still looking for a measured move target of this head and shoulders, eventually down to 83.06. Let's take a look at Euro Yen, see what that's doing. Again, looks as though it completed another top pattern. This was an upward sloping head and shoulders top. We broke through the neckline at 140.76. We've had an attempt at trying to recoup that today, but have stalled just in front of it. So that may be a good cue to think about getting short, looking to target lower prices. The measured move of the top pattern ultimately comes down to 133.07. And as we can see, we've got a big band of support on the chart there between 134 and 133.15. I think I'll leave it there unless there's anybody looking for anything different. Let's just go through the rest of the yen pair, shall we? So this is New Zealand dollar versus the Japanese yen. Looks as though it's completed some sort of top pattern on the breakthrough, support at 83.84. I'll be targeting a move down to these lows now at 80.59, looking to sell on retests of that newly formed resistance. And let's take a look at sterling yen. Similar sort of pattern, had been trading in a range, now broken down below that at 163.03. Any rallies towards the neckline of this pattern now would represent opportunities to sell, looking for lower prices here. So it looks as though this intervening move from the Japanese has stuck for now. Previously, they haven't, as we know, and they've been reversed pretty sharply. But at this time of year, I'm not sure we're going to get any massive reversals on that. Just seen we got a request for dollar CAD, so let's take a look at that. So dollar CAD, I was convinced that this was probably one of the neatest looking head and shoulders that you'll ever see on the daily chart. We saw a nice breakdown there. The measured move was down here at 130.14, which we never got to. And since then, prices have just been moving higher in some sort of consolidation channel for the time being. We have rallied into resistance at 136.82. So that's kind of the line that I'm looking at now, maybe to initiate shorts. We've got a bit of resistance above at 137.00, which has prevented prices from moving higher. If we see a breakout of this channel to the downside, then I think that would continue to confirm the bearish opinion, and we can see a pullback maybe towards these previous lows that we posted in November. So for me, it is a case of selling into rallies towards 137.00. Obviously, stop losses slightly above that. I'd probably go above the right shoulder actually, which would mean I've got stop losses somewhere in the region of 138.15. But ultimately, I am looking for lower prices, given that we've got that bearish view on the dollar index. So that's my view on that today.
Have you done New Zealand dollar, US dollar? Could you just do a little bit more on that?
Yeah, absolutely. So this was trading in a bullish channel, as we can see. However, we did see a swing failure on the 13th of December. We tried to overcome this previous high from back in August and failed. So we saw a move above it, but then a close back below the resistance level, which indicates a swing failure. And we've seen prices continue to correct lower in the short term. So we do have support coming in at the an old 38.2% fib level. So it's actually attacking it from the opposite end. It's not really one maybe that would do much of a job, but it does also line up with this bullish channel. So maybe it will. And that's at a current price of 62.56. Also, maybe those with a sharper eye can notice that there is maybe some sort of topping formation here. Let's see how that looks on the 4-hour chart and see if it offers anything for us. Just clear up those drawings. So what I was trying to get at is that maybe there's a head and shoulders top here, and we can get that drawn on. Going there is the left shoulder down to the neckline, then we've got a head and another neckline, then we've got the right shoulder, and maybe we are breaking down from this pattern as we speak. So I would have gone with that. I always prefer a horizontal neckline on my head and shoulders. That was at 63.19. We've broken down through that. So maybe any rallies towards somewhere around 63.30 are likely to cap any upside advances in the short term, and we may see lower prices. In terms of targets, as a result of this, we can measure from the head to the neckline and project lower, and that indicates that we may see prices retreat all the way down to 61.25 on New Zealand dollar versus US dollar. So pretty good risk reward on that from current levels.
Yeah, nice. Love it. Okay. I'll take a look at indices now, Joe. Let's start with the Dow and see what we're seeing on yesterday's day chart. Bearish. Sorry, it was bearish. It's now bullish. It's turned around. Nice a stall at the 200-day moving average on Dow, which was significant. And again, we've closed above the previous downward trending resistance. So it's a reverse trend line for us now. We've got this golden cross, which is very, very positive for a little bit of a more medium to longer term trade idea. That's positive, and yeah, really nice daily candle sets up opportunity to get long today. On Nasdaq, it's not the same, but we did sort of like post a little bit of it almost looks like a bullish hammer, not quite, and but a good day today would sort of show a reversal, a morning star reversal on that on Nasdaq as well. S&Ps similar, bullish hammer, a little bit clearer on this one, and yeah, looks pretty decent. Although we're below the 5,500 and 200-day moving average as we are in Nasdaq. So Dow performing a lot better from a technical perspective than these two, but the S&P won't be long before it catches up. Negative on the China 50 yesterday, trading around the 100-day moving average, and bearish into that. We've got an inverse head and shoulders we're looking at, maybe possibly coming down to retest the neckline before rallying, and similar sort of price action on the Hang Seng. We can see that we've sort of like stalled, we've come back, retested, and maybe looking to move more positively on the day, but 200-day moving average doing a job of capping price action then. Nikkei, not so nice, below the main band of moving averages, and the last 6 days of price action have closed more negatively. We've got support all the way down to 25,500. We've stalled around a previous level of support, and just bounced a little bit higher, but doesn't really look that great from a bullish perspective. And the DAX, very clear bullish hammer yesterday. With the double top formation that we highlighted, hit its measured move. Lovely, job done. Bullish hammer and the crossover, the golden cross on the 5,500-day moving, 55 and 200-day moving average golden cross there. So that all looks pretty rosy from a technical perspective. FTSE, the 200-day moving average has done a decent job. We've closed marginally below it, I suppose, on last Friday, above it on the last couple of days of price action. So that's pretty good. And won't be long before we get the golden cross on here if price action remains quite buoyant. Yeah, that's probably about covers it off on the indices side of things, Joe. Yeah, how did we do in gun to head? I'm eagerly anticipating
Okay.
Good things from there.
Right, let's take a look then, shall we? So let's go to the profile. So gun to the head trades, or gun to the head challenge, is where Steve and I pick trade ideas live on the video in the hope that we can turn a profit between now and 9 o'clock UK time. Each of the ideas that we come up with must have a stop and a target, and they must have risk reward ratios that are better than 2 to 1. These are closed out at 9 p.m. as I mentioned. We do it on the basis of risking 1% of trading capital per trade. So when we talk about how much R we've made, 1R is equal to 1% of our hypothetical trading balance, which is, since we started with £1,000, is now trading around 2,981. So it's been a pretty good run for us overall. But we can check the ideas out yesterday on our TradingView profile. We get them posted up in real time. So no hiding behind these, full accountability on these ideas that we come up with. Steve was looking to sell natural gas, waiting for it to break down. And if we click the play button here, we'll be able to see that Steve was nicely on side at 9 o'clock. He made 1.04R on that trade yesterday. So well done to you, Steve. It just had a little tag at that major support that you highlighted and had a bounce off, which I guess is to be expected, but there's no reason why these things can't just slice through those levels and continue moving low, which of course is what you were hoping for. I was looking to sell XRP yesterday and noted that it was into a small band of resistance, but sadly the trade didn't work. We had a bit of a risk on field to markets yesterday eventually, meaning that it moved higher. I got stopped out before it eventually did reverse, but that's the game. All in all, we did make a small amount of profit yesterday based on Steve's winning trade. So let's go again, Steve. What do you fancy today?
don't think it was my winning trade. I think it was someone that prompted me to look at it yesterday. So was that Larskins? I don't know. It wasn't down to me.
Someone asked, yeah.
Yeah, someone asked, and I promptly followed. So thank you for that. I'm a bit sort of I'm in an iron about that. I mean, if we look at natural gas, the key thing for me is this horizontal support, resistance, whatever it could be, support. Initially, it was resistance, then it became great support. And is it doing another job, Joe? It potentially is. It's like flushed out a few week longs, and it's back on the road higher. I mean, we have got these crossovers, so overall, it's still in bearish territory, but it's gonna fight for its life, I feel. On the 4-hour chart, you can see a nice little turnaround at the moment. So there's the risk. A break below 520 is the risk. Quite a nice level to sort of like potentially, because you can see the sort of like gapping up and gapping down we've done. Is this just another retest? Yeah. So, I mean, overall, is there a gap? Well, I mean, you got this spike lower from Friday's price action between 11 and 3 o'clock, and this spike higher between 11 and 3 o'clock on Monday. So really, that's filled that gap. If you're looking at the shorter term charts, you know, if you're looking at natural gas from a sort of like a futures perspective, there may be some gaps in the chart, but we're sort of like, look, I'm just charting on this, going on this, nothing significant. So, but yeah, I think it could have like a bit of a rally today. Gold, interesting as well. Could easily sort of have an argument or a case for sort of like selling here, tight stop, so good risk reward. And then oil. What are we going to do with oil, Joe? I don't know. I'm really sort of like inverse head and shoulders. Is it? Is it really? Not sure. So I'm stuck. Have you got anything to sort of tide
Yes.
me over? Go on then. You go.
I'm going to take a look at euro yen. I was toying with whether or not Santa was going to come today on the indices. I was looking at the CAC actually. So maybe give you a bit of inspiration here, Steve. We saw this obviously turn around yesterday in a lot of the European markets, posting that morning star formation, a really big turnaround intraday. And what I noticed on the hourly is that we had gapped higher today, potentially forming some sort of short-term bottom here. So potentially going to target a bit of a rally in the CAC, and we are potentially forming an engulfing candle as things stand. But that's not what I'm going for. I'm actually going to go for euro yen. And the reason being, obviously, we know yen is in power mode at the minute following the move from the Bank of Japan. I've got this head and shoulders on the daily chart, an upward sloping one. We saw a breakdown through the neckline yesterday. We've seen some sort of attempt to maybe retest the neckline of that head and shoulders top. But we've seen prices move back lower. So I'm going to target a move lower towards this previous low here around 137.36. If we take a look at it on the intraday charts, then we can see the major level of support there that we broke down through. Prices sliced through that level and potentially looking to roll over again to the downside. So I'm going to sell it at the current price of 139.93. I've got a stop loss at 141.02. And I'm targeting that move down to that major support at 137.36, giving me a 2.37R risk reward ratio on that today. So I'm going to get that posted up in a moment.
Lovely, nice one, mate. I'm going to go with Dow. Actually, I'm basically this daily chart it gets me pretty excited. I'm not normally a bull in indices. I bought Dow on Monday. It failed. But the bullish hammer from the 200-day moving average and a positive start today, and also the reverse trend line, fills me with joy, fills me with Christmas spirit. So I'm going to get long on here. Let's go to the hourly chart and sort of like make it a little bit more clearer. Also, you could say, have we got like an inverse head and shoulders? Maybe, but we're sort of like just a little bit of a pullback now. Might be a good opportunity to get in. Right, but where will I target? I'll target move up there. So really sort of I'm looking at probably 150 tick stop against a 450 tick rally. That's what we're going to go for. has to expire at 9 o'clock, so we haven't got much time. So probably let's get like an inverse head and shoulders, see what we can get out of here. Left shoulder's quite clear, left neckline, head is quite clear. There we go. That's my trade idea for the day. Buying at 32,926, targeting a move to 33,376, stop at 32,776. I might put that on myself on my little squirrely account that I've got going on the side.
Squirrel it away. Okay, just had a quick request to take a look at CAD yen, so I will do that as well because we've covered most of the yen pairs except that one. So let's go and take a look at how that's shaping up. So as we would expect, pretty big moves to the downside. We were talking about this for a while, talking about the top formation that had been in place ahead of this intervention from the Bank of Japan. And then we spoke about a bearish flag formation, which gave us the runaround a little bit. But as we can see, that's now firmly completed and indicates that we are going to see a continuation lower in price. We do have some support that maybe are expected to do a job, but hasn't so far. Let's just remove that line there. I'm focusing on this swing low here from the 12th of May. So we slice through that. But now maybe that will provide resistance on the upside at 97.79, and we can maybe look for retest of that level to initiate more short positions. We've got support down here at 93.02, so it looks like we are very much in bearish mode in this particular pair and looking for lower prices. We looked at some volume indicators yesterday just to see if there was any kind of vacuums in price in certain markets. And let's just take a look here and see if there is anything along those lines. So we've got these lows from back in March, and we'll go to the current price. And we can see that a lot of the trading has now taken place at the top end here, forming this top pattern, a big distribution of positions. But if we look at this, we've almost got a double distribution here on the volume profile. And as you can see, now that we're broken through this support at 97.80, there was not a lot of trade that went on in this period here. So it may be that we've got a vacuum in price here. So prices could slide quite easily down towards these next higher volume nodes on the profile chart. So that is pretty convincing, really. So therefore, I'd be looking to sell into retests of 97.80 if we indeed get one, and targeting a move down to this next level of support, which is at 93.09. Obviously, the biggest challenge if you're going to do that trade is where do you place your stop loss to protect yourself from any spikes to the upside. But certainly from a risk reward perspective, it looks pretty encouraging, and we got some interesting signs on the profile charts to support this. So hopefully that was helpful. Okay.
Awesome.
Let's take a look at the day ahead then. What have we got on the calendars today that we need to be aware of? So at 1:30 UK time, we've got Canadian consumer prices, so the latest read on inflation in Canada. And then at 3 o'clock, we've got the US consumer confidence number. Should we have inventories today as well, Steve? Is that on the calendar anywhere?
All inventories, I think so.
Yeah. Or is that
it not
Thursday?
showing? No, well, it's normally Wednesday, but is it different this week?
I can't see it on the calendar.
Oh.
Oh.
Oh, interesting.
Yes, we do have them at 3:30. It's just not showing up on the stream I've got here. So that is out at 3:30. So if you've got any oil exposure, you need to be aware of that as well. And then on nothing tomorrow. So Friday, we've got the US PCE prices index. So the data is obviously starting to slow down now ahead of the festive period. And I expect volumes will start to drop off as well. Maybe some position adjustment, people taking profits if they've got any, or starting to cover positions ahead of the Christmas period. So you need to be careful of that as well. Okay, that's it from us, Steve.
Thanks for watching,
mate. Everybody. We've got 2 more days of streaming, and then we'll have a little break ourselves and come back in January. Please continue to get involved, guys. We love you having your comments and looking at the charts for you. So yeah, keep it up, and we'll be back tomorrow morning.
Lovely. Cheers.
Have a good day, everyone. Bye-bye.